Hey everyone, I'm Tim Wills and welcome back to the channel. Rocket Lab is one of the latest companies to go public through a SPAC or special purpose acquisition company. Now these are slightly different to an IPO, so I'll explain what a SPAC is and then we'll dive into the Rocket Lab offering. A special purpose acquisition company is a shell company. It has no products, no services, and no IP that list on the stock exchange with the eventual intention of acquiring a private company. The private company then takes the place of the SPAC on the stock exchange, and just like that, the private company is public. This process saves a whole lot of time compared to an IPO, which could take months and months and be a really grueling process for everyone involved. So the SPAC that Rocket Lab is being acquired by is called Vector Acquisition Corp, or VACQ, on the NASDAQ exchange. So if you're wanting to invest in Rocket Lab, you'll want to put your money into Vector Acquisition Corporation, but hold off on buying shares just yet because there's a few things I wanted to run through about the company and the industry that could potentially be worrying. The company itself was founded in 2006 by Peter Beck in New Zealand. They're a small satellite launch service provider, putting satellites into low Earth orbit for governments and private companies. They're the fourth most frequent launcher of satellites globally, and one of only two private companies to deliver reliable and frequent access to orbit. All of their launches currently happen in New Zealand, but they are in the process of bringing a launch site in America live probably this year. I think it's important, if you are looking at investing in Rocket Lab, to be bullish on the space industry as a whole. Analysts are expecting the space industry to triple in size and be worth $1.4 trillion by 2030, so in the next 10 years. Now that's a massive number, and there's only about a dozen countries in the world with a GDP higher than that. But despite the size of its parent industry, the small rocket or the small satellite launch service business is only going to be a fraction of the size, leaving room for just a few select companies. Former Pentagon space official Chuck Beams thinks a realistic number would be 4 healthy small satellite launch service operators. These are ones sending satellites into low Earth orbit like Rocket Lab, and don't include the likes of SpaceX, Blue Origin, and ULA. Okay, so 4 healthy small rocket operators. That doesn't sound like a lot, but it actually gets worse because there are currently over 100 of these such companies around the world. So it's shaping up to be a race. Who can get to the top the fastest, and can they stay there? How do you get to the top? You need a great product that's going to cost oodles of money. How do you get the money? You have to bring in outside investors. So I think it's pretty clear why Rocket Lab want to go public and why they're going public through a SPAC. They simply can't afford to go through the grueling process that is an IPO, and not just because of the cost. Obviously an IPO costs lots of money. An IPO can also take months to finalize and almost entirely consumes every top executive at the company. So they have to focus all their time and energy on going public rather than focusing on staying in front of their competitors, which when you're in a industry as competitive as the small rocket launch business, you simply cannot afford to do. The good news for Rocket Lab is that out of those 100 competitors, it's probably safe to say they're number one at the moment, but they do still have competition. One of the main ones, Virgin Orbit LLC. That's backed by Sir Richard Branson and Virgin Group, which has incredibly deep pockets and with that the ability to outlast competition in tough times. But they are considerably behind Rocket Lab in terms of innovation. Their flagship rocket, Launcher 1, has just had its first successful flight on January 17, 2021. It can carry a payload of 300 kg, which is comparable to Rocket Lab's Electron rocket, which has been operational since 2018. So they are a few years behind, but it would be foolish to write off anything Richard Branson is involved in. And there is other competitors like Firefly Aerospace and Astrospace, which, on a side note, Astrospace is actually going public through a SPAC at the moment. They are still yet to put satellites into low Earth orbit though, but they are very close. So what's the money going to be used for? Basically, they want to speed things up. So far, they've done 18 launches with their Electron rocket, but their Mahia Peninsula site has clearance to launch vehicles every 72 hours, which would equate to 250 launches if every slot was filled. Now, obviously, the demand probably wouldn't have kept up with that, but you get the point. There's lots of upward mobility. Now, Peter Beck, the CEO of the company, said they're about 30% of the way to his vision of the company, and that vision is to be an end-to-end space company, your one-stop shop for sending something into orbit. So they build the satellites, they build the rockets, and they probably keep them in orbit as well. They look after all that. Their next step towards that goal is building the Neutron rocket. It's capable of carrying a payload of 8 tonne and will have the ability to carry passengers, although that's not the initial purpose. The Neutron rocket will be a middle ground between the current Electron that Rocket Lab has and SpaceX's Falcon 9 rocket, and will be ready in 2024, assuming everything stays on target. They've also talked about acquiring other companies. They've done this to a lesser degree with their own money, but they need public funding to really start to ramp that up. And as I said before, there's almost 100 or over 100 private companies in the small rocket launch sector. Not all of them will survive. In fact, most of them will fail, but that doesn't mean they don't have a valuable IP that Rocket Lab can use to grow their own business. So the company has been valued at $4.1 billion. This represents a 5.4 times multiplier on their 2025 expected revenues of $749 million. And that's generally how the stock market works. The price of a stock is modeled off what the stock will be in 2, 3, 4, and even 5 years' time in this case. And that's why the likes of Tesla is so high compared to its current earnings, although it's been dropping back in recent times, because investors are looking at where the company could go rather than where the company is right now. This is Rocket Lab's expected earnings over the coming years. I'll just pull that up. We can see here, this is the financial model summary. Now, they're obviously very bullish on growth in the next few years, which is obviously a good sign. I think the interesting thing here is that their current active pipeline is circa $2.2 billion, which is promising for the projected revenue, but we do have to remember that their current valuation is modeled off this one here, their 2025 revenues, which is $749 million. And a lot of what they will earn in 2025 will come from their Neutron rocket, which is expected to be released in 2024. So any delay in the release of this rocket will push back those earnings and could be quite bad for the share price. And this is where being a public company could be quite dangerous. So consider this scenario. The year is 2024 and Rocket Lab have fallen behind in the production of their Neutron rocket. Say they have had a few unsuccessful launches. They might have, one of their rockets might have exploded in midair or on the launch pad. Now for a private company like SpaceX, this is fine. They can try again, assuming they have the money in the bank, and we've seen this time and time again with their Starship rocket exploding in midair and then on the launch pad. But public companies don't have as much of a risk tolerance. If Rocket Lab had a string of unsuccessful launches, they could be strong-armed by their shareholders into abandoning the project entirely. The likelihood of this happening is pretty low, but it does go to show the risks of being public in an industry like this, and something investors should be wary of. The last thing we'll talk about is their EBITDA, which is earnings before interest, taxes, depreciation, and amortization, which is pretty much, but not quite, profit. So I won't call it profit, but you can think of it as being sort of like profit. In their financial modelling, they expect to generate their first positive EBITDA in the year 2023. You can see there that's a $26 million positive circa profit, with their adjusted EBITDA margin increasing every year thereafter. EBITDA margin is the amount of money that makes it to the bottom line of their revenue. So in their first year of profits, they expect to keep about 10% of their earnings as profits. You can see here in 2023, they expect to get earnings of $267 million, and then profits of 26, which is exactly 10%, and that is their adjusted EBITDA margin. But as the years go on, they do expect the percentage of money they bring to the bottom line to increase. They do this by cutting down on costs and increasing efficiency, and their margins are pretty much on track with what you would expect. For comparison, SpaceX had a profit margin of 10% in 2018, and they said they were on track to increase that to about 33% by 2020. Now, obviously, they are a private company and don't have to disclose that information, so we don't know how accurate that is, but we can see the ramp up of Rocket Lab's profit margin or EBITDA margin from 10% right up to 32% in 4 years after they make their first profit. So, should you be bullish on Rocket Lab stock? I'm personally bullish on the space industry as a whole, and I think these new up-and-coming companies will be the next giants of the industry. The likes of Boeing and Lockheed Martin's days are numbered. They'll be replaced by the likes of SpaceX and others. Rocket Lab could be a part of that, but they do need to execute on their Neutron rocket, and I think they probably will, to be honest. Thank you so much for watching. If you like this type of content, please do consider subscribing, and I'll see you back here next week.